Robschild, no investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said millionaires don't need astrologers, but billionaires do, and so we begin. Today is Tuesday, August 20th, 2024. In today's episode, we're going to start with a little discussion on speculation, just because of the fact that I see so much darn speculation out there. And nobody's worried. Nobody has any thought in their head, seemingly, as to, like, I believe I have a lot of wealth in this thing, but that thing is, like, way overvalued by any way that you look at it. Namely, the two main ways is that it's a very speculative type of asset, like cryptocurrencies and those kinds of things, that we have no idea what kind of value they're going to have in the future, if they're going to have any value at all. Extremely speculative. And then the valuation of a lot of mega cap companies having an extremely speculative value priced into the price of the shares. When you have a $3 trillion company trading at a 60 multiple, PE ratio of 60, that is saying that there are lots of people that have this stock believing they have a certain amount of wealth, when at the very least 2/3 of that wealth is completely speculative and has no basis in reality. You would never go to your local grocery store and see that it has been, like, increasing its sales a lot and getting popular, and deciding that you're going to pay 3 times the price for that grocery store than, like, let's say a convenience store, a different kind of store, right next to it. But you're going to pay 3 times the price for the amount of money that the company earns compared to what you would pay for the convenience store. It doesn't make any sense. Now, granted, all speculation is in retrospect. We don't know for sure if something was a speculative idea or if it panned out to be a great idea, and it just kept expanding at a similar rate or even at a faster rate. But we can't predict the future, and since that's in retrospect, speculation it's a dangerous place, and in retrospect, I have a phrase here, all speculation must and will die. This is a Hindemith reference for the third movement of his trumpet sonata. It's almost like every single cycle where, people get just exuberant ideas about how the value of things can just go to the moon. It happens over and over again. It happens every cycle. It happens all the time. And people never learn. They never learn to see what speculation is and be careful with it. And when it blows up in people's faces, that's when people learn. The dot-com bubble, all speculation died. 1929, all speculation died. The great financial crisis, all speculation and the value of those housing loans died. When you consider it in retrospect, looking backwards, all speculation does die, therefore all speculation must die. Just to again illustrate this, imagine the future, 10 years from now, 20 years from now. Are these assets really going to be worth what they're supposedly worth today? That's the mindset that you have to have as far as kind of smelling if there might be speculation in your assets. Moving on, let's talk about oil and divergences. While junk bonds and the S&P 500 is seemingly close to basically, fighting to get to all-time highs, just ripping higher and higher, a global commodity called oil tells a different story. And, when you have a divergence, in other words, you have oil clearly showing weakness, although something like the S&P 500 is clearly showing a lot of strength still, what ends up happening is you end up having a lot of people show jaws. You have one going up, one going down, the jaw's shut. The alligator's jaw is shut at one point. Is oil wrong or is the S&P wrong? That's the only question. So if oil's wrong, then oil's too cheap and it will go up. And if the S&P is wrong, then it's the other way. The S&P will follow oil down. Oil really is a very good leading indicator as to what is going on in the economy and what is likely to happen in the future of the economy. When the price of oil and gasoline is going down, it means that the producers, the people selling oil and gasoline, are, they're fighting to sell it, which makes the price go down. There's too much oil for the amount that people want. People aren't buying as much oil. So what does that mean? We're not using as much energy. And energy is kind of like the lifeblood of the economy. How much energy are we using? How much are we driving our cars, flying our planes, buying stuff to have come to our house? Having producers produce things. It all requires immense amounts of energy. So that's why oil is such a great leading indicator. And the oil producers right now, we're collapsing here. So this is very notable and something to watch out for. It gives a lot of weight, I think, to my bearish view on the markets. On a very short time frame, we're seeing a lot of dojis today. A doji looks like this. This is the S&P 500. I'll try to make it bigger so you can see it. It's a little tiny candle, and it has a wick on the top side and a wick on the bottom side. This is a fight zone, big battle zone. This oftentimes spells, especially after you've had a run up in a market, this can spell a top here, which would make sense, and it would line up with my idea that I've been talking about, smelling a head and shoulders pattern. This one starting in January 2024 through today on a daily time frame. So obviously shoulder, head. If this turns out to be the top and we do have a shoulder here, this is, if it does play out that way, this is a very large head and shoulders, and at the very top of the market that it's ever been, this really could be a major long-term top in markets. Exactly the same pattern in the NASDAQ, the triple Qs, the doji being even a smaller red candle. I don't know if you can even see it on your screen, but it's there. Tomorrow, this week, 2 p.m., we have the Fed minutes from Jackson Hole. So all the things they were discussing at Jackson Hole. How dovish is Jerome Powell going to be? That's kind of the question. The funny thing about that is that forever and still, dovish news is good news. Borrowing money is cheaper for companies so they can make more money. But also, extreme, if it's extreme dovishness, if you see fear in the eyes of Jerome Powell, that could set off some more canisters of exploding. People starting to be like, oh gee, if they're worried about the economy slowing down here, as pretty much all the data suggests, that could potentially add fear into the market. But we'll see how it all plays out. But yeah, so 2 p.m. on Wednesday, we'll see the immediate market reaction, and then and the follow through afterwards. VIX futures term structure. Again, I've been saying this, I don't even know, for a long time. It's not like October suddenly rose. If you haven't been following the show, I've mentioned this many times for months and months now. October, it is oftentimes a more volatile month, but for it to be priced in this high here, being priced overall higher than all the way out to the January contract, is very notable. The market is expecting major volatility, major market correction probably in October. That's what it's smelling out. It's what I'm smelling. And yeah, again, be careful out there, folks. I showed this chart yesterday, but didn't talk about this pattern here that I drew. To me, this was a bull flag here, pretty clear one. Well, let's bring this line in here. So if you think of this as the pole and this is the flag that we broke out of yesterday and had some follow through today. A lot of strength in bonds right now, it seems. And not just treasury bonds. I'm still amazed to see how much strength there is in HYG, high yield corporate bonds, junk bonds. Again, part of the movement up here is because if the yields on the guaranteed securities, treasuries, if the yields are going down there and the value is going up, then junk bonds can also go up because they're relative to each other. But it's worrisome to me how much risk there is out there and how expensive a higher yield corporate is getting. Who's buying? I just have to ask, who's buying this market to go higher right now? It's unbelievable to me. So much so I actually have puts on HYG. I might be increasing that position soon. But another similar thing to junk bonds that I like to keep my eye on. This is iShares preferred and income securities ETF. This is like mostly preferred shares. PFF is the ticker symbol. Operates similar to junk bonds. When companies get distressed, this can get very weak very quickly, and it's showing so much strength here. It's like I said at the beginning of the show, this is why I'm bringing up speculation, is because I see so much crazy speculation there out there in markets right now. It just makes me like pull my hair out thinking about like, what are people thinking right now? I don't get it. I just don't get it. Fear and greed index. We were in extreme fear over the Japan carry trade blowing up, and then we stayed in fear, and today we went back into neutral. So I will be very surprised to see if we go back into greed mode. We'll see what happens. I forgot to mention at the beginning of the show, right? The daily reminders. The 2-year, 10-year yield curve inversion is past its second birthday still. It keeps getting longer. Am I going to say this for another year? Are we going to get to a 3-year birthday? That if we get to 3-year birthday, yeah, I wouldn't want to own any risk assets, any stocks or anything. I might be 100% in bonds. I might go that direction soon anyway, depending on how the data comes out. If unemployment continues to just like go up and up, it's like, okay, now it's like, it's so obvious that like, I mean, you'd have to be not very intelligent, let's say, to put it kindly, to be owning stocks in that kind of an environment. And the benefits, obviously, the biggest benefit's going to be in treasury bonds. But again, no advice on this show. Again, also the SOM rule has been triggered. Recession has started. Unemployment it's low. It's at 4.1%, but the direction that it's going is very steep, indicating that we're in the recession already. It's starting. Back to the charts. TNX, the 10-year treasury yield. This helps guide me to see what's going on a very short-term basis. Now, I had mentioned previously that, let's see here if I can get the right drawing tool. Is it working? Hold on. There we go. I had mentioned very recently a pattern here of this being a flag and this being the pole here, and then a downsloping flag like this. And I said that, like, okay, it has the potential to break out to the upside here, right? But then the larger time frame, we have a pole going down here, and I saw a flag developing this way. And the way I look at it, we've already broken down actually out of that pattern. I was actually expecting rates to go up, maybe even to hit this past trend line. This is a long-term head and shoulders on the 10-year treasury yield. It's a very big one. You gotta scroll out pretty far to see it. But yeah, looks like short term, it looks like it wants to go down along with oil, which makes sense. Those two things normally coincide with each other. They are suggesting that, and treasury bonds, the bond market being the smartest market, and probably the treasury bond market being the smartest of the bond markets, right? For the yields to be cooling off here with oil, global commodity to be cooling off here, it's smelling a slowdown. All while the S&P 500 is at all-time, like basically kissing all-time highs. It's insane. It's ridiculous. It's too easy at this point. Anyway. Again, no advice here on Robschild. TYX, 30-year Treasury yield. This is a pretty large red candle today. Looks like it wants to keep heading lower. We'll see how that works out. Last chart. I always like to keep an eye on markets and that I think are like the dumbest possible money. What are the dumbest people out there doing? So the dumbest money, MSOS, cannabis ETF, dropped by 6% today. I found that to be notable and interesting. So you do have some fear of going on in extreme speculative areas. That's all I have for you for today's show. Hope you enjoyed. Thank you for watching. Robschild.